JP Morgan finally acknowledges crypto? Insurance for that exchange that keeps getting hacked? Harvard jumping on the blockchain bandwagon? Russian state supercomputers mining Bitcoin? French and Germany call for cryptocurrency regulation. All that and some daily market analysis coming up right now on FUD TV. As you can see, there are many coins in the red today. We're starting to see that the coins are separating a bit. Not all the charts look exactly the same. We've seen, quite a bit of similarity overall in the crypto markets, but we're starting to see some real divergences here, nice spikes here on our chain, and different kinds of behaviors where you're starting to see the coins start to take their own lives again, starting to really become their own projects again. And that's what we really look for when we start to see the market getting back to a bull run. We're going to quickly go over today's biggest gainers and biggest losers. As you can see at the top here, we have an insane pump. Earlier today, Ucash was up almost 1,400% in just 24-hour period, and that's just insane. Upon doing a little further digging, it seems to me as though this is not only a pump of unbelievable astronomical proportions that screams out pump and dump here. There's some rumors on Reddit that this coin is being used to wash money or something of the sort. So I'd just stay away from Ucash. Let's get back here to the biggest winners and losers. We have Grand Coin, a bunch of really small market coins here, but we have up here Gifto making really nice moves. Gifto is a really cool coin that's really going after more of a social media application, sort of peer-to-peer cash system, very easy for giving tips and social media rewards, and it's sort of maybe a competitor or a partner with Tron. So as you can see, it's been slumping of late, but it has a nice little kickback up here, having a nice 56% gain. So if you were bought Gifto on the super dip anytime recently, you might see some gains here. Now for some headlines. The story of the day is, of course, that JP Morgan has just released an internal memo explaining that cryptocurrencies are not going anywhere and that they are certainly here to stay. In order to understand the magnitude of this news, you need to understand that JP Morgan CEO Jamie Dimon became notorious because he called Bitcoin a fraud back in 2017. This all started when Jamie Dimon, the CEO of JP Morgan, called Bitcoin a fraud back in September of 2017, triggering tons of price volatility and causing a lot of people in the community to become very upset with Jamie Dimon and kind of target him personally for these statements. He has since apologized for his statements publicly, and this internal memo is just one more piece of evidence showing that JP Morgan is ready to start taking cryptocurrencies seriously, and so should the rest of the world. Cyber insurance is coming to the cryptocurrency exchange game, which is amazing news for cryptocurrency investors or traders who may be keeping a portion or all of their cryptocurrency on an exchange. While it's very much so not recommended to keep your coins on an exchange, it is sometimes a lot more convenient if you're doing rapid or semi-frequent trading with your cryptocurrency coins. 2017 was one of the worst years recorded for hacking, and we can assume that it might even get worse from here on out. The ability to protect your cryptocurrency investments, even in the event of a hack, is something that would really help bring crypto into the mainstream. Harvard is getting into the blockchain game by supporting one of its lead geneticists as it launches a DNA-fueled blockchain startup. Nebula Genomics is the name of the startup, and it will have its own coin, and it will be a direct competitor of Ancestry.com and the Google-backed 23andMe. And Russian engineers were just caught using state supercomputers to mine Bitcoin. The two engineers managed to connect the offline machine to the internet, applying its vast computational power to the Bitcoin network. Apparently, these guys didn't get too far, as the Russian Special Security Service shut down their machine shortly after they turned it on, as it set off an alert that the machine was being used improperly. Finally, there's just been a call from French and German officials to have a crackdown on cryptocurrency. This comes as a surprise, as the European Central Bank has recently released a statement saying that cryptocurrency regulation is not high on its to-do list. This seems like a potential conflict. The calls were made by German and French officials at a recent G20 summit event. The statements were made at a recent G20 summit event where French and German officials voiced their concern that cryptocurrencies were leading investors into potentially risky and volatile markets. In fact, they went so far as to say that the recent rise in cryptocurrency's valuation was causing alarm. They outlined 4 primary critiques of cryptocurrency in general. 1. Understanding the nature of crypto tokens. 2. Monitoring the rising exposures of the market participants to tokens in terms of market integrity and financial stability. 3. Protecting non-professional investors. 4. A common approach is needed for anti-money laundering and terrorism. Well, this seems pretty obvious, but the reality is that we need some kind of way of knowing that cryptocurrency isn't going to people who are doing extremely, extremely horrible things with that money, like human trafficking, terrorism, etc. These are very common financial regulatory issues across other financial sectors. So if cryptocurrency really hopes to reach full-scale adoption, this is a bridge that we will have to cross at some point. But for now, the European Central Bank doesn't have it very high on its to-do list, which should be called for a little bit of relaxation for the cryptocurrency investors. If you enjoyed this content, please like or comment below. We always love knowing if you enjoyed the content we made or what you'd like for us to cover in our next episode. Thanks so much for watching. That's your daily news update. This is Elio Trades, and you're watching FUD TV. We'd like to remind you that this is not financial advice. This is just our opinions, as we are enthusiasts and not professional financial advisors. Thanks so much for watching, and we'll catch you on the next episode.